Dr. Kehinde Oyeleke, Managing Director, Seedvest Limited. Dr. Kehinde Oyeleke is a distinguished finance executive, investment professional, and institutional leader with over 30 years of experience in investment banking, private inquiry, venture capital, and financial services. He is the Group Managing Director of Seedvest Limited, where he has provided visionary leadership for nearly 2 decades, driving financial inclusion and expanding access to capital for micro, small, and medium-sized enterprises across Nigeria. Before joining Seedvest, Dr. Oyeleke held senior leadership roles at African Capital Alliance, Asset and Resource Management Company, ARM, and PricewaterhouseCoopers, LLP, New York, where he advised clients on investment strategy, corporate finance, and business transformation. A respected authority in corporate governance and financial advisory, he serves on the board of several companies and non-governmental organizations, providing strategic leadership that promotes sustainable growth and innovation. Please join us in giving a warm welcome to Dr. Kehinde Oyeleke.
I'm happy you're all here because we're here to learn. I don't know about you, but even I've been taking a serious note. It's not every day you get to listen to the likes of Dr. Lugbemi or my friend Chidebosi. But it's a lot to take in, but let's just take advantage of the opportunity. And I want to start by appreciating the organizers of this program. If every church does this, Nigeria will be a different place. My prayer is that God will to bless and enrich them, even as they are nurturing others. I have a very lengthy presentation, but I think the whole idea is to convey to us the importance of finance to business. I'm not sure how much of my presentation will be projected, but notwithstanding, we should have a good time regardless. I don't have as much experience in banking as many people here, but the little time I spent there, I've seen businesses that started with nothing grow to become thriving enterprises. I've also seen businesses that started with a lot of funds that basically just failed. Therefore, it's not always the money you started with that matters. It's the financial discipline that you have and the application of the right principles. I'll say that again as time goes on. It's not money. It's basically know what to do. Therefore, today we discuss the role of finance in business. I'll start by giving an example of 2 traders, starting with 2 million. One doubles our business within 2 years. The other lost everything. The question you ask yourself is, how come? What matters is not the money. It's not the 2 million. It's what they did with the money. It's how they structure it. And the question we should ask is, how many businesses really fail because they lack customers? Very few. Because if you don't have customers, there will never be a business to begin with. But then how many businesses fail because they run out of cash? Quite a lot. The burial ground of business that die because they just don't have the cash is a lot. And it's not just the question of throwing money at the business, it's a matter of how do you apply cash. That's what we're going to discuss today. Therefore, the outline what we'll cover today is why does finance matter in business? I explained to you what are the sources of finance you have, because sometimes people say, oh, I don't have money. But then when you ask them a few questions, you find out they actually have much more than they thought they did. And then, of course, the issue of choosing the right kind of finance, the kind of discipline you need to manage funds, and then, of course, we talk about stewardship. Because everything we have here, we're just caretakers. One of the things we hear is that, yeah, a business is like a human body. I know it sounds like a strange analogy. Profit is food that you feed the body with. If a business is running and is not profitable, it's a matter of time. That business will collapse. Customers are like oxygens that the business breathes in. Again, without oxygen, the business will struggle. If I would die, it's the same thing with human body. Cash is the blood. And of course, I don't think any human being can survive without blood running through him. So basically, those are the key things. You need customers, you need profit, but you need cash, also known as king. They say cash is king. And I've used the word a bit loosely. I've used, profit, cash, and things like that. So what difference? Profit is not the same thing as cash. I'll give illustrations down the line. A lot of businesses are profitable, but then when you don't pay your staff, what happens? They would leave. When you don't pay your suppliers, what happens? They will not supply you. And when you don't pay NEPA, they cut the bill. Even when you pay them, they cut it anyway. So, but bottom line at the end of the day is that cash is very central to any business. And what do you do cash for? Of course, you need to buy inventory, you need to pay your rent, expand operations, pay salaries, buy equipment, and so you survive difficult period. So I'll give you an illustration of a trader. She sells provisions. Customer come every day. Profit looks very, very robust. She has a big sale deal on a Saturday, but she must pay the suppliers on Tuesday. There's a problem there. Because unless she started with a big stash of cash, she's going to not have good to sell before Saturday comes. That is the gap we're talking about. And that's what they call working capital. Yes, you have a good business, but you need to fund that business. You need to fund it in a way that doesn't choke the business. We can talk about microfinance because that's supposed to be my area. But what I would, essentially, it is what is available to many businesses, but we'll come to that later. What I want to talk about is what are the sources of finance that are available to businesses. There are about 7 layers. Many of us know this thing, but we don't know them for what they are. This very starting point of any business is what is your home fund that you're starting with. Whether you inherited it, you sold something, or somebody dashed you, that's his first call. Anybody that wants to start business. It could also be from your savings or from any source. It is the easiest fund to have because you don't need to tell anybody any story. But it's always very, very limited. Because if the business is really big enough, you typically won't be able to fund it from your own pocket. The next level is family and friends. In fact, they call them 3 Fs, family, friends, and fools. Not fool in the sense of being stupid, but people that actually have money, but they don't have much to do with it. They are also a bit more accessible. Your senior brother won't be asking you the question of your life before he gives you money. But they could also be very, very limited because if you're doing a real big business, how much can your brother give you? Or let that, even the Aliko Dangote has a limit to how much he can give to his blood brother. But they also have this tendency to strain relationships because sometimes business doesn't conform to the rule of life. It takes a while for a business to gel, if they gel at all. Therefore, you could have a situation where the brother needs his money now, because it's his own need. And then you've invested the money in business. And all of a sudden, they start calling family meeting. Say, listen, I gave Kayode money. He's telling me stories. But it could also be that the business goes up, down before it goes up. Things are not looking. In fact, you are thinking of going back to it for more money. The guy says, yeah, the one I gave yourself, I have plans for it. Therefore, family and friends have a way, they are not a reliable source of fund. You could join cooperative, go to commercial banks or microfinance banks and all that. And of course, at the 7th level, you could talk of big investor like venture capital and things like that. What is more accessible at this level, which both the government and private business need to do more of, is microfinance, because they are not as rigorous. They don't make as much demand from you as your commercial banks. Again, I'll go to the nitty-gritty of that. For commercial banks, typically they deal with larger businesses. You cannot just say, oh, I started this business, I need 5 million. They will not even look at you. So therefore, they are not the appropriate places to go. They also will be asking you for better structure. Where are your financial records? Where is your audited account? Where is this, where and that? And sometimes when they send their loan agreement, you need a PhD in law to even read through it. Not talk of identify the pitfalls. And of course, it's just difficult for small businesses to get. I don't know many small businesses. If they are really small, that can say, oh, I have the money from banks. It doesn't happen. Which means that the low-hanging fruit for us for the point of view of funding is microfinance. Of course, there are also places like development finance institutions that are good on paper. Oh, Bank of Industry, or Bank of Agri, or any other fancy name they get. Yeah, they do support institutions. And sometimes their rates could be very, very low. But the process could be hopelessly bureaucratic. And at the end of the day, you're just spending time there. You invest a lot of effort, and at the end of the day, you don't get the money. So they are there, but I haven't gotten many testimonies. People that say, yes, I started this business, I got money from BOI. I'm not demarketing them. They have their place in society. But for the audience I'm looking at in this room, that will not be your point of call. And of course, you're talking of investors and all that. Investors will be asking for a lot of things, and they really don't like to come in at the onset of the business. They will look at the business that's trying to get to the next level and provide the funding. So I actually do have a table that compares. Owner's fund is easy to get, and it's always available at the beginning of the business. In fact, that should be your starting point, because it's highly unlikely that you will start a business and then you go to a bank of any name and say, I need money. The first thing they will ask you, what have you done? What's your track record? And if you don't have any, they won't support. And in not supporting you, they are doing you a lot of favor, because you don't want to be worried about the business and be worried about repaying the loan and all that. So I know I mentioned families, cooperative and all that. Again, you need to pick the one that works better for you. The next point I want to make is about how do you align your finance with the business. I'll give some illustration. If you want to buy a piece of land, maybe you take my friend Chief Bossi's advice, you want to buy that land, and you go to somebody and borrow money for 3 months to buy land, you can see that there's a mismatch right there. The first rule there is that you cannot use short-term funding to fund a long-term project. It just doesn't happen. Because what happens is that before, yes, maybe the appreciation will happen in time, but it's not going to happen in 1 month or 2 months or 3 months. Therefore, you need to align the tenure of your fund with the expected lifespan of the business. When you want to buy stock, for maybe you don't need you're making cake. You need to buy sugar, you need to buy flour, you need to buy coloring or whatever else they use to make cake. Yeah, that's short-term funding. That works. If you want to purchase a vehicle, like I think Dr. Lubemi said, maybe if to do Uber or to carry your business, that's a medium-term project. You cannot borrow money for 2 months to buy a car. It cannot work. Okay? If you're building a factory, That's a long-term project. Again, the money you look for that, you need to be long-term in nature. And if you are doing farming, like my friend, Afri farmer, who is coming after me, you would need to look for a seasonal type funding. You cannot have a farm that turns around its product in every 6 months. You want to pay monthly. How will you repay the loan monthly when your income is not coming until 6 months? And of course, if you want to fund emergencies, you look at your savings. Therefore, there are 3 things we need to look for when you're talking about funding. We need to match tenor with purpose. Short-term funding must be for short-term projects. And if it's a long-term project, like you're building a house or you're doing a project or you're doing a factory, the funding has to be long-term. No matter how readily available the money is, if it's short-term, you cannot fund the long-term project. You also need to match your cost to your margin. What does that even mean? You selling a product, your profit margin on that product is 15%. You went and borrowed money at 30% because you need to supply the other sharp. It cannot work. You might as well just be working for the financier, because what happens is that the person will take all the profit you are making and much more. Therefore, whatever money you plan to make on the business must be aligned to the cost. Your cost cannot be higher than the expected income. And of course, you also need to match your structure, the structure of the business you are doing, with the cash flow. If it's a business that takes 6 months to turn around, you cannot just say, oh, give me money, I'll be paying monthly. If you get an APO, for example, that need to be supplied and you'll be paid in 3 months, telling your banker you'll be paid the money every month, it just won't work. Because how are you going to do it? Where we get the money for in the first month, second month, and all that? So there's a lot of alignment that needs to be done. You know, the word says, I will perish because of ignorance. Therefore, we need to be sure we do the right thing. All these things I'm saying is that doing business is good, but a lot of business can get the owner into trouble if the funding structure is not right. So, some of the issues that also affect business is when you use business to fund their personal life. I think particularly we mentioned that when it says that, oh, your best friend bought a car, and they say, listen, I can't be left behind. He doesn't have 2 years on the shoulders. Good for him. But the question is that at the end of the day, you cannot take business money to fund personal expenses. Like, oh, it's my grandpa's burial. People are coming from everywhere. What kind of eye would they be looking at you, taking to look at me? And all that. Yeah, if you have the money to do that, fine. But to go and borrow money to do that, to pull out money for your business to do that, it's not going to help anyone. Or you want to buy a car and look good and all that. Or this is even legitimate obligation. Junior school fees has to be paid. And then you get supplier credit and all that. It cannot work. I'm not debating here the importance or necessity of all these ideas. The question is, what kind of fund are you using to support them? Or maybe you have a visa that you haven't used for 2 years, and then they say, if I don't travel in the next 1 month, I may not get renewal. And then you quickly go and borrow money in microfinance. Not a bad idea. And I'm not saying your visa should expire on use, but you need to find other means. So businesses collect money and they still fail. Why? Because of planning. Okay? Or maybe records are not well kept. There has to be, the issue with getting external funding is that all of a sudden you are answerable to a third party. You might be doing your own business quietly and nobody is bothering you. But the moment you get money from an institution or from anybody, you now need to be accounting to them, which means that you need to keep proper records. Of course, business can also fail if fund is diverted or you don't monitor or there's no discipline. can give an example here of the pharmacist that stock up the shop. You know, sometimes we're under this pressure. This order, I need to supply it immediately. So the typical you hear is that the Chinese market, I think they close in January and February or something like that. I need to stock up. Yes, stock up. But don't stock up more than you can sell. Because otherwise you might stock up with inventory that will expire. And meanwhile, you have obligations that will not expire. So there has to be a lot of alignment you need to do. So let's talk about bookkeeping. Many of us are doing our business quietly, just selling, but all of a sudden we need to keep record. We need to, because that's how you know whether you are doing well or not. When you are selling, you need to keep sales book. And that will tell you what are you selling on credit, what are you selling on for cash, and then how much can you, then you can even use that to now plan. Because if on your record you make X amount in a month, then you know that this is your free cash flow that is available. You need to have a cash book. How much cash are you getting? Are you selling most of your goods on credit? A lot of businesses have died because they sell on credit, but they buy for cash. Therefore, you have that misalignment. All of a sudden, people are owing you billions, but you are also owing billions. The mismatch need to be minimized. Also need to look at your inventory register. Are you stocking things up that are getting spoiled and all that, or even be eaten by rodents and things like that? And then look at your loan repayment and all that. Okay, so I'll be right now by looking at, okay, what do lenders look for? They're not looking for you to be perfect. They're not expecting you to be perfect. Nobody is perfect. And when you are lending to small businesses, which as many of us are, it's already factoring in that a lot of things won't be in place. What they're looking for is consistency and traceability. Okay? So they're looking for, okay, how much sales is the business making? What's the cash flow statement like? How much free cash flow do you even have to service this debt? Are you owing other people? Because lenders would like to know who they are queuing up behind. If you, for example, come to me, I need 1 million. 1 million looks like a small amount of money. But if you're already owing other people 50 million, then I'm number 51 on the list and all that. You need to look at even your personal commitments beyond that business. If your cost is eating up a lot of the money, they need to know how much is your inventory moving. Are you just loading up a lot of stock that are going nowhere, and how profitable you are? You know, they say that what get measured get done and all that. Okay, so how do you know you are ready for loan? You ask yourself, what's my monthly turnover? Again, how much profit do I make? How much inventory do I hold? Inventory stock. Who is owing you and how much are they owing you? And when are they expecting to repay you? Who do you owe and how much? And when are you committed to paying them? How much cash do you actually need? Let me speak to that. Because a lot of time we think, oh, I need cash. I've seen people come to me and say, oh, I need 50 million. And by the time you sit down with them, you actually find out that they might not be more than 10 million. How come? A lot of free credits can be gotten by talking to your suppliers. Just talk to them. Just open your mouth and talk to them. Madam, what can you do for me? I've been your customer for 1 year. I've been buying from you. Can I have some breathing space by way of credit finance? And that will be finance that you are not paying for. It's free finance. You also can look at the people that are buying for you. Can they deposit? Even if you need to give them a discount, it's not important to say, you know what, maybe if you prepay for the order, you get a 5% discount or something like that. People like Mr. Bosch and their coach, they do it a lot. They will get a site for project and they say, listen, come and pay based on plan. And they use that money to go verify the construction. You can do the same thing for your business. The whole idea is that you don't throw money at everything. Be mindful, be intentional about your business. And then you also need to ask, what are you even looking for the money for? And how do you pay it back? Because you need to know, does the cash flow support it and all that? And if you can't answer many of these questions, then maybe you are not ready for a loan and you could be heading for, the business could be heading for trouble. Okay, so we're talking about stewardship here, and I think again, this is a church, and we can look at the story of Joseph in the Bible. The king dreamt. Joseph foresaw famine. He also foresaw abundance before famine. But he didn't just stay there. He made plans. The years of plenty, they built storage and all that. If when the lean times came, they just didn't open the store to every Tom, Dick, and Harry. They put managers in charge of the silos and things like that. That's how business is done. So there's planning, there's saving, there's forecasting, there's risk management, there's working capital management, there's even economic resilience. Everything rolled into one. That's Genesis 41 for those that need to be reminded. So I'm closing by speaking about stewardship. One of my slides says that a tool in the hand of a poor steward can cause damage. If you give a cutlass to somebody who is careless, you cut himself. He might even cut another person. The same tool in the hand of a wise steward can build something that lasts. Therefore, the same tool, different result. Let me give the example of an imaginary person I call Grace. Yeah, please. If there's any resemblance to anybody here, it's not intentional. So Grace started with 50,000 naira in personal savings. She kept no record. She's only using a very brilliant memory to remember things. No separate bank account. Business income and family income belong together. She was selling, and then Junior would come and he'll give me money to go and buy stuff. And took her first loan without a clear repayment plan. She just believing that the loan will be repaid. And of course, she nearly lost the business in the first 18 months because of all this thing that wasn't properly done. But there was a turning point. Grace opened a separate account where and then of course, she now took a ledger, started recording her sales, her expenses, and nothing fancy, just a regular notebook. She approached a cooperative, then the microfinance bank for loan. And she matched her funding with the project. She didn't take a 1 month loan to finance a 2-year project, and she tracked every naira that she used. So what happened? Grace's business has now grown. She employed 15 people. She exports her product to neighboring markets. She maintains fully audited accounts and qualifies for commercial bank financing on her own merit. She even sponsors church programs and mission, building orphanages and things like that. And of course, she's building wealth gradually. What is the moral of this story? Planning is essential to everything we'll do. I'll be rounding up by what I call 10 commandments, not involved in the Bible, of business finance, which is more or less a summary of what I've been saying all along. You need to separate business money from personal money. In law, they actually treat the business as a separate living being. Therefore, separate business money from personal money. Don't commingle them. Don't say, just dip your hand into the till and start buying things as you want. That doesn't work. You also need to pay yourself a salary. It's a two-way thing. Of course, that comes from separating yourself from the business. You're running around until you pay yourself. Because if the business cannot pay you, it's a sign that the business itself is not viable. You also save before borrowing. You cannot lay the foundation of a business with a borrowed fund, typically. You borrow only for productive purposes, and you keep proper record. Of course, when you pay money, you repay loans promptly. In fact, the Bible says that he that borrows and doesn't pay is a very wicked fellow. You also were able to build good banking relationship, and of course, you ensure your key business asset because anything can happen. You don't chop all your profits; you invest them, and then you honor God, integrity in business. I think that does it for me more or less. But the whole cocoa of this presentation is that finance is a servant, not a master. And it's easy, it's possible to run around, keeping busy, but if things are not done properly, things might not work. Therefore, it's good to always just have the proper structure, proper finance, and all that. As I've been said, this is just it's not a lecture. It's just to encourage ourselves, and when we get to question and answer sessions, I will be happy to answer your question. I thank the organizer for the opportunity. God bless you all.